So what's the difference between an LLC and an S-Corp? How does it affect how an owner is paid? These are questions that I hear all the time from clients, and a lot of times there's just a lot of confusion around the difference and what the benefit of an S-Corp even is. So I want to cover that in this video. This video isn't going to talk about the legal structure of the LLC versus the S-Corp or any of the legal side of things. I'm going to focus primarily on the bookkeeping aspect and specifically the owner pay aspect of the LLC versus the S-Corp. So I've created two categories or two pictures here to represent the LLC business and the S-Corp business. So I want to just kind of talk about how the owner is paid through each and kind of just show you an example flow through of how the money works. So over here we have your LLC. Throughout the course of business, you make sales, those sales go into the company, then there are expenses to operate the company, so it's using money, and then there's money that's left over, that's your profit. So in the normal course of business, as an LLC owner, when you want to be paid, you take money from your profits, ideally, and that money goes to you. This is what's called your owner draw. So your owner draw is how an owner pays themselves through an S-Corp. So let's say you have a profit of $10,000 this month and you want to pay yourself $5,000. You don't run payroll, you don't do anything like that. You just write a check from the business to yourself for $5,000. That's considered your owner's draw or owner pay. So let's put some numbers to this thing just to kind of help clarify it. So I've got my example here. Let me write some of these numbers out. So let's say that this S-Corp makes $350,000 in sales. And it costs the LLC, so we'll do our little LLC box here again. So it costs $250,000 to operate this company. So here's your sales, here's your expenses. So your profit is $100,000. Let's say that through that period, you paid yourself, the owner, $75,000. So out of your $100,000 profit, you paid yourself $75,000. So this leaves $25,000 in the business account. So you took $75,000 in owner draws. It's the end of the year and it's time to do taxes. Well, what a lot of people think is, well, I'm going to just be taxed on this amount because that's what I took out of the business. But that's not the case. You're actually going to be taxed on the $75,000 plus the $25,000 left in the bank, or the $100,000 net profit, in other words. Now, why is that? Well, from a tax perspective, an LLC is seen as just a legal entity. There's no tax benefit whatsoever to having an LLC. There's legal benefits. It protects you from liabilities and a whole other list of things that I won't go into. But from a tax perspective, it's considered a pass-through entity. So all of the profit that the company makes is actually just seen as your profit. It doesn't matter if you left $50,000 in the business account and you took $50,000 out, you're going to be taxed on $100,000. So this entire amount of your tax or the total profit that you're being taxed on, it's subject to what's called a self-employment tax of 15.3%. Okay? So this 15.3% is made up of 12.4% Social Security and 2.9% Medicare. So if you've ever been an employee and you look at your paycheck, every single paycheck, we know there's tax deductions. You get paid $1,000, there's $250 of deductions for taxes, and you get paid a net of $750, whatever it is. So what you might not know when you're an employee, though, is this amount that's deducted from your paycheck, it also is being duplicated, and your employer matches how much was withheld, and they also pay for it. Okay? So out of your check, if you had $500 in Medicare and Social Security payments that you had to deduct for taxes, your employer also has to pay $500 in taxes. So they're matching it. So when you're employed for yourself or you're self-employed, especially in an LLC, the entire amount is getting taxed, your payroll tax, but it's also getting taxed the employer portion. So since you're the employee and the employer, it's considered a self-employment tax. It's this duplicate tax that you have to pay, because you have to pay the portion for you as the employee, and you have to pay for the portion for you as the employer to cover the employee taxes. Does that make sense? I know it's kind of feel like I'm talking in circles, but ultimately what it means is this portion here that your employer used to cover for you, now you have to pay for it. So that's this 15.3% self-employment tax. When you're an LLC, there's no tax benefit. So all of the profit the LLC makes is considered your profit and will be taxed at the highest tax rate, which is the self-employment tax rate. So this over here, you're going to have a whole bunch of other taxes, but on top of it, you have this employer matching portion, which equals $15,300, which is 15.3% of 100,000. Okay, so as an LLC, this is the self-employment tax that you would have to pay. That's what it's called. It's really the employer tax, but it's called self-employment tax because you're self-employed and you have to cover it all. Okay. But then over here you have the S-Corp. Same situation. The S-Corp makes money. It spends money to operate. It's left over with profits. The unique thing about the S-Corp is the S-Corp was designed specifically to give small business owners a tax benefit that C-Corps get without having some of their other tax issues that if you set up a C-Corp too early, there's double taxations. We're not going to go into that in this video, but the S-Corp was kind of set up as kind of this in-between phase for business owners to really help them offset their taxes. So now you have your business, the business makes money, there's costs to running the business, and now the business has profits. But because you're set up as an S-Corp, when you pay yourself, you have to be more structured. You can't simply take, $5,000 of your $10,000 profit and pay yourself, because now you need W-2 wages. So there's an increase in complexity to the S-Corp, but the benefit of that complexity is now you will see and receive tax benefit, and you will see a reduction in the self-employment tax that you have to pay. So now let's put some numbers to this. Before I get into the numbers, let me just point out once again that within the S-Corp structure, it's best if you're running W-2 wages on a monthly basis to yourself and then owner distribution. So using the example that we had over here, let's say we had $10,000 in profit. We haven't paid ourselves W-2 wages and we haven't even paid owner distributions. And we want to take $6,000. Well, we need to pay some of that through your W-2, and then we want to pay some of that through owner distribution. How much you pay is based on some calculations to just make sure that you're paying yourself a reasonable wage for the revenue the company is receiving. Okay, so let's use the same exact numbers that we used over here for the LLC. Let's say that the S-Corp generates revenues of $350,000. Here's the S-Corp entity box. And just like before, it costs $250,000 to operate the business. So you'd be left with $100,000. Now, for ease of, just to reduce complexity, let's say you're following this generic CPA rule of 50-50. 50% of your profit is going to be distributed through distributions, and the other 50% is going to be W-2 wages. So we know that 350 minus 250 is 100,000. So let's just take half of that. So of that half, you're also going to pay yourself 50,000 in W-2 wages. So then you're left with a $50,000 profit. I don't have a whole lot of space, so I'm going to put you up here. You're the business owner again. So you get paid $50,000 in W-2 wages. And to keep things the same, you're going to take $25,000 in distributions. So you're left with $25,000 in the bank. Now what happens over here is this amount is the only amount that's subject to your self-employment tax, because this is your wage. In the LLC, everything's considered, at the end of the year, everything's considered wages, and that's why everything's subject to the self-employment tax. But as an S-Corp, now you can actually process actual legitimate wages, whether it's hourly or salary, and whatever you pay yourself through your W-2 wages will be subject to the self-employment tax, because when you pay yourself the wages, there's a deduction that occurs for your taxes, and then the company has to match, again, the Social Security and Medicare taxes. So for all of these $50,000 in W-2 wages, you paid Medicare and Social Security, and the company has to match that. However, when you come down here to the profits now, you distributed $25,000 to yourself and $25,000 still remains in the bank. So again, one of the complexities here is most people think, well, I'm only going to just be taxed on this $25,000 because I left the rest in the bank. So it's in the business. Like I didn't take it out. You will still be taxed on this $50,000 because this $50,000 profit flows through to your personal return. The only entity that does not have this is the C-Corp. The C-Corp, if you leave $25,000 in the business, the C-Corp is going to pay taxes on the $25,000. You and your personal return will not. But we're not going to get into that here. With an S-Corp, you still will pay taxes on the full $50,000 of profit, even if you only took $25,000 out for yourself. However, the benefit is this profit is not subject to self-employment tax. Okay? So you paid your self-employment tax up here on your wages. This $50,000 is not subject to self-employment tax. So instead of paying $15,300 in self-employment tax, you paid self-employment tax on the $50,000 in wages, which is $7,650. And this is not subject to this. You're still going to pay taxes on this, but you're not going to pay that self-employment tax. So the difference between the two is that this one saved $7,650 because you didn't have to pay self-employment tax on the total. I hope that all makes sense. If it doesn't make sense, like always, please comment or leave a comment. Let me know where I lost you or where it got confusing. If it all made sense and it was great, please let me know so I can continue to make content like this and continue to make videos that are beneficial to you.